morning, my friends, and welcome to the Breakfast Club. My name is Darren Hancock, and here we are on one day before the election, November the 4th, 2024. Welcome, welcome, and welcome again. Let's have a little poke around in the markets here. Let me just show you that, or let me just tell you, the day before an election, we're looking for some pretty heavy manipulation. And just prior to the market open, there was a couple of really nice reversal entries this morning. I managed to catch some of these on the way down, went back up, caught this consolidation, a cam model entry here uh, for a run back up into the premium level. And now we've got a small reversal and we're back inside this range here. That's a 15-second chart, by the way. So before the markets open, that was really the opportunities to run in and grab something when the market's open. There's going to be some heavy manipulation we anticipate. So keep your powder dry. It's a day before election, a major election that has huge ramifications all over the world, really. So watch very carefully. Demo the snot out of this. Make sure you keep your risk tolerance way down if you're playing in the markets, even demoing this. You got to kind of look at an opportunity just to study price action and study how markets are manipulated during big events like this. So let's have a little poke around in here and see what we got for the daily chart. Start here. Kind of go through these real quick. So we've run out these lows here. We've got relative equal lows below us, and we've got an old high back on October 30th. We have a small fair value gap sitting just above us. Friday's high will bring us back into that consolidation again that we have overall. So if you're looking for upside run, I'd like to see, mind you, we have it relative equal lows. We may make one more run down here, but I do like this fair value gap above us, even reaching for Friday's high at 293. That's still 130 handles above us. If we can get a institutional order flow entry drill for a reversal on a daily chart. Otherwise, that's kind of ideally what I'd be looking for, but let's have a look at the hourly. How'd you like that for a bunch of mess, hey? So you want to see this kind of this wick, no more than 50% of that wick, back inside this candle here. This is the new week opening gap. If we just come back inside the new week opening gap, react off of that, use the top of the gap to start pushing through the consequent or the mean threshold of this candle, and then I'd be looking for another run back up into that fair value gap we had above us on the daily. If we can get back up into this fair value gap above us here, that'll take us into that Friday high. So I do like new week opening gap to new week opening gap. So we're kind of bouncing around between these three of them right here. Manipulation time, folks. $15-minute chart. What have we got in 15 minutes? So we know we have upside objectives, so I like to see this 187 get taken on the upside on a close before I consider going higher. Yeah, just watch that on a 15-minute chart. It's always interesting to watch a 15-minute chart and say, yeah, I want to see that go higher to get up into that higher range, and yet we can see a reversal here on a 15-second chart back inside the range. We've pulled back inside this range, and now we're inside this one, and we're sitting right around the 50% of it. So we have small consolidation here. If we can get a nice big bull candle, get up above here, come back and use it to leverage through 166, then we're looking for a 175. Let's have a look at ES. ES looks like it's got some relative equal lows below us. So again, we have overall downward pressure as well. So if you have a run below the market first before running back up into this fair value gap above us here, that would be an interesting run this morning. Let me see if I'm actually live here. Sorry, I'm just trying to find my channel here. There we are. Adi, good morning. I'm starting a little earlier this morning. See what we can get. Okay, so let's get this one back down here. So yes, yeah, we could see a run below the lows first. If we get a significant run below and come back up, we could see a sizable drop in the markets, depending on the election here. This could be a 400 points, 300 points or more. I think if we just use this candle, or this one here, sorry, this last down close candle here on October 24th. If we look at that one as a potential for, we get a downward close today below that, and use tomorrow or the election, sky's the limit. It could literally run all the way back up and take out the highs before going lower. So that's what typical algorithmic drive would be for me. But who knows what we're in for tomorrow, eh? I have my extremes boxes placed in the market, so we'll see if we get a hit on those tomorrow. I popped those in last week, so we'll see if we get a hit on those. I'm still expecting Dow to take a big drop. Everything looks like it's poised to just rocket lower. Good morning, RS. And Bree, good morning. Is it Breacle? Breacle? 72, good morning. Dixie. Got nothing on the daily. We do have a small reversal. So if we can get below this candle here, if we can get below 103, 295, I'd say lower. get a retracement back up at a new week opening gap into the consequent encroachment, and then peel away from there, leaving that last piece open. That would be an interesting dive on a 4-hour. We're already in a reversal on Dixie, so those who are in the Forex market, we've got to run above this fair value gap here. Provided this stays as a close, we come back into this high and that fair value gap. Look for a run back up into the range here, and I'd be looking for 10, a return back to this daily fair value gap again. And if you can get above that, then we're looking for another run back into that gap above us. So that puts downward pressure on GBP and the Forex currencies. So we've got relative equal highs above us. So if the American dollar goes down first, we look for a return back into this fair value gap here, new week opening gap. And then if it starts to march higher, we're looking for these relative equal highs above us. Yep, I like that. Euro. We've got a reverse here already. It feels like I want to get back inside this range. Yeah, if we got to kick off here now and start to run this high out, you want to get a body above here and use this fair value gap to leverage getting back into this range. Pull your fib tool high to low, 50%, and working on the way back into this cluster here. Consequent encroachment of that. Yeah, I'd be looking for that to go a little higher. Oil. Got a nice little short on oil this morning. Just off this candle here. Once we traded back up into here, I traded below that one more time. Then I was looking to get back in. Got a short just for a short run here. Had I stayed in that would have been a monster run this morning. So anyway, we've got this reversal here. Traded all the way back inside the fair value gap, ran that high, traded above it, came back into it, traded higher, took out this high. We have a reversal. We've traded below it. We've come back into it, traded lower, inside that range. So we're looking for the lower prices, and I want to see this hold. If we lose this candle here on the upside, then I'm looking for another run higher into this little range. And then if you take out that high, we're looking for a run back up to 71.58-ish. So just wait and see if this holds. If not, we're looking for another run back down deeper. Joe Matt, good morning. How are you doing this morning? Canada. Skip that wheat into commodities. I think we had this downside call for commodities a few weeks ago. So we're still waiting for that to hit. Wheat's been kind of a slow, insidious kind of, we saw the reversal happening here. It's just been a couple of weeks of just slow grinding its way down to our downside objective. Reaching up for soybeans was our upside objective here. Didn't quite hit it last week. It was super close, but didn't quite hit it. So we're looking for potential to engage that again this week. again, it's all, we had to watch my watch level here. Even that, I don't think hit perfectly on my watch level. No. So we're looking for it to get down into here, provided it doesn't clear out that old high again. And then I gotta get back in and no notifications for 3 days. No notifications for 3 days. 3 days. Sorry, I'm gonna mute you guys this morning. Again, I was just popping onto my screen, so I'll kind of mute that. I'll kind of keep an eye on you from another screen. My phone, I think it is. Yeah, so that's soybeans. Still looking for corn here. Sugar or coffee hit our objective, take out those lows last week, and now we're looking to see where she kicks off from here. I do like the reversal you just got in coffee, but you know, you've got to clear out 247.15 for me to go bullish again. Otherwise, we're still inside this range here. One's for long, one's for short right now. So I got nothing for coffee. For sugar, sugar's hitting our downside objective we were looking for last week, and it's hitting it right now. Just taking out those lows. So sugar hit where we were expecting it to go. Live cattle is now, we were hoping it would just kind of sit off, key off of here and start going higher. It's dropped down for the last 3 days. We've taken out this low on a wick, so I want to see if the body takes the low out and use this consolidation to go lower, and that is a CAM Model 3 to go lower back into this fair value gap old high here, deeper inside that range. Cocoa's finally taken out the lows we're looking for. We're back inside this range here now. We're right in the middle, so got nothing for you in cocoa. Lean piggies. We're on top of this gap now. We've closed above, opened, came down and retapped that gap twice. Now I'd like to see if it starts to get a nice little kickoff here. It's in a premium, so you're paying a real premium price. I'd want to see a body get above these two candles here first before you consider it bullish. Bitcoin was quite choppy this weekend. Didn't really get us, or flat I should say, didn't really give us many opportunities. We have a reversal here back into this candle. Went higher, took out that high there, deeper inside this range. Look for the upside objective, would have been right here. Finally hit that, but that was a long drawn out run. That's just this morning. On the weekend, it was not, there's a lot of tight range here. Not a lot of opportunities. This morning, we have a 5-minute reversal. Taking out that high. If we can get below this candle here, looking for a run on the liquidity down here, and you'd be looking for anywhere from 68, 553. $68.7, big figure. Gold. Nothing in gold. Yeah, I got nothing in gold just yet. I'd have to break this high here to consider going higher. Banks, big banks. They feel like they're ready for a big drop. Like this one's poised to go lower. This one's fine right now. But we're back inside this range. This one's already taken out a reversal here. Came back, found support at it, and we're dropping already. So TDN looking for that to go lower. We've already stepped. Reversal here. Trade back up inside it. Drop lower. Order block. Trade below it. Come back up inside it. See if we trade lower. So Royal Bank, looking at all these banks are looking to go lower. All hinges on this election, I think. Google, we got to return back to that consolidation we were looking for. Hit nicely off the high. So we'll see how it opens today. I'd like to see that start to retap that old high there. If we start digging through the mean threshold of this consolidation or that imbalance there, then we're looking for this low, and then we're looking for back here at 153 to 156. UNG, that gas, natural gas, took out these lows. So I want to see how it acts in here now, see if we can get a reversal situation happening in that. There's a bunch of other stocks. I thought I'd look for the top 10 American dividend stocks. And these are the highest paying dividend ones, or the ones that consistently pay high dividends. Universal, I'd like to see that start getting above 51.74. Northwest. We've taken out these lows. We got a body close below here, looking for this to go actually lower. Yeah, looking for that to get down into 37.91 to 38.32. They gotta look like they're poised to just drop. These are the top Canadian ones. High dividend yielding Canadian one. Shepherd, good morning. Craig, good morning. And Oli. So far we've got support off this level to go higher. Back inside the range. I do like this area here. For the upside. I thought I muted these guys. Yeah, it's not a time to play in the markets there, Craig. There's going to be a big manipulation, I think, the day before the election. There are no stops. Everything just looks ominous to me. It just looks like I got a feeling like it's just going to go on a big drop. So I'm keeping everything on the sidelines, just waiting. Morning, Mr. Dave Berry. How are you doing, sir? Highs taken. Reverse. Order block. Return right to it. Beautiful. Return to it. Hammer down. See if it takes these equal lows now. Yeah, weekend was good. Um, Went and got to meet up with some of the other people we're going to go to Africa with next year. So it was nice to meet some new people. We're going as a group. I think there's 16 of us that are going. We have to do. We're going to do this big balloon ride. It holds 16 people just in this one balloon. So it's going to be huge. See how we act right here at the 145 level, the bottom of this wick here. Let's see how, if we don't take out those lows. Come on, lower. There's the lows. Now you're always looking for that little reversal opportunity. You want to see that start driving up and through this now. That's created a reversal there. Now I want to get above this little high here. This high right here. I want to see it get above that with a body. This one's nice if we can get into here. Yeah, that's my first indication we'd like to go higher. If we can just tap inside here and then take out that high. Got to get a body above that level first, though. If you want to see some sort of break in market structure here. Those of you who are all from different countries, is this election something that concerns, is in the news for your country? I'd be interested to know if other countries are kind of waiting with bated breath to see how this election turns out. Not that I want to get into discussing politics, just curious as to if anybody else cares about this election, if it's just an American thing or not. Do we seriously have a delay? How big a delay do you guys have on your feed? It's almost like a full minute behind. 25 seconds. See, you want to get this a body above here first before you consider this going more significantly bearish. The fact that we're back into this order block again, I like that. Now you wouldn't want to see this low get taken here again, no? You want to see it start climbing out of here. Okay. We didn't get this high broken. See that? So you're just inside this small little range here. You want to see that whole price? It didn't. Just slammed straight through on the downside. Closed below this level. Drove down, take out the lows again. Now you want to see it get above here. Consider that going higher. If not, we're still going lower. Yeah, we got relative equal lows below us. Come back up inside that fair value gap now. Once you trade below it, trade back into it, keep going lower. Good morning, Edgar. Hope you had a good weekend. So we're looking for the mean threshold of this candle to give way, and then start to get into this mean threshold here. We've hit it once. I'd like to see it just eat right through that. Start running for these relative equal lows below us. Again, not bullish again until we get above this consolidation. Testing 1, 2. Just want to make sure. Yep. I just want to make sure that my volume wasn't turned off. Campione, good morning. Thank you for the thumbs up, everybody. Appreciate it. So far, it's continuing to pan out. Still finding support off this level. Fair value gap here. Order block. I like this consolidation. Do we continue to hold off of that and drop lower? Your volume is very low. I have you turned up with some, yes, it blows my headphones. Let me have a look at my volume here. Yeah, I've got my volume like cranked right up here. So sorry about that. Yeah, I'm in a different computer. I have a headset on now, Shepard. So sorry about that. I didn't want you to hear all the fan just whistling in the background, so my brother gave me a headset here to use. So sorry it pops. I'm trying to keep the mic close to my mouth here, and I don't want to be yelling. It's 7 in the morning here. and they're all sleeping. So I want to try and keep it kind of below yelling. And my voice is not really higher pitched in the mornings anyway when I get up. It's more of this raspy, lower kind of thing. So can the rest of you hear me okay? Dave, it's fine here. Okay. Still looking for these lows here. Looking for that fair value, or sorry, that wick, consequent encroachment, 50%. Just keep working through it. So far, we're not getting any break in structure to the upside. We're continually working on the downside, which is kind of good. That's what I want to see. I got a whole bunch of followers on my Skype, or not Skype, their Facebook channel. So letting everybody know that we are on and live this morning. See how we're slowly grinding our way down there? It's not as quick and effective as we had hoped, but that's kind of what we're expecting with pre-election. It's just slow and insidious. Good morning, Hans. 109 is our target on the 15 seconds. For the 15-second chart, I'm still going with the 1 hour chart. I'm looking for the 102. And then I'm looking for the 069. see how we act in this little spot right here. I want to see how that acts right down into 121 here. There's 121. See what kind of bouncing around we get in here. Just want to see a body close below this level here, 121. We'll put a little motivation on the old You see how there's some sensitivity at that 121 level? Now we want to see if we can get continuation. Get a body below that level. You took a short from 154, you said? 15-second, but out now. 154. Gotcha. Nibble away at it, Hadi. Yeah, I got a couple of reversals, a cam model, and an extension this morning. So I moved to the sidelines before the market opened, and that's it. I'm not going to gamble because it's literally gambling with all these potential manipulations. But it was a nice setup there this morning, and that's a pretty good setup you got there, Hadi. As soon as it dropped below that level there for continuation, trace back into it for a short. Good for you. Did not break out that high. Continuation. Take out this low here. Trade back into it. Continuation. Consolidation. Back into it for a cam model 1, a cam model 2 for continuation. And you're just coming back into optimum trade entry reversal. Small range. Mean threshold. And slowly continuing down. So that's what we're looking for. Good. So we're still looking now for 102. put that over here at the rate that thing's going. It'll probably catch up to my carrot over here. Edgar, good morning. Hi, Dee. Thank you, Dee. You're welcome. It's good. Yeah, I like what you're doing there, man. You have a nice, solid setup. And as you can see on a 15-second chart, it keeps happening over and over and over again. And if the market is clean enough, like this is pretty choppy here, so you really have to keep your leverage low and pull that stop loss in tight at logical levels where you'd say, okay, well, if it broke that high there, I know I'm on the wrong side of this, so that's where my stop loss was, my fail safe will be. And you just keep looking for the next place where it fails for you. Like for here, we've got a small little consolidation. If we have a big displacement candle above that, using this candle for support, we're coming back into this range. So we're just into the mean threshold of that candle. It's holding price right now. We've had one little drill through it. So we'll see if we use this as support to go higher and take out that high. So this is a little reversal going on here now. We want to get a little break-in structure here with a body, use that for support, and then start looking for a run back up into this range here. Yeah, it pays dividends. Hey, Eddie, when you follow the rules, don't try to squeeze them. Don't try to force them. If you feel like you're forcing it, then the market's not not playing the way you want it to play. Just wait. You're on a 15-second chart. You're bound to get something soon, at least in the next hour. There's always something that's kind of setting up for you, right? There you go. So we got that run above the high here. We actually opened above it, came back, gave it a little tap. Now we're looking for a run back into that range. So this guy's on the sidelines for now because we have a break-in structure. We have a reversal. Giving these a tap now. I think somebody called it I thought it was my own unique model, reversal model, but it's not. I think somebody called it a Reaper. It's Michael's Reaper. Go to ictindex.io and look up Reaper. I think that's what he calls a Reaper. If it's a Reaper, then that's my model and Hadi's model by the looks of it. So we're deeper into that range. You see that? Pull your fib tool on that. If you were running that back up and it came back against you and closed you out, you paid yourself all the way up there. If you didn't use that fib tool and it's come back all the way through here now and you're underwater, you see the value of the fib tool now. And if you didn't trade this, good for you. You shouldn't be. You want to see this candle hold price like when it did here, held it, left inside the range. You got a reversal right here, ran all the way through that candle. So you want to see it come back up to the bottom of this one, and it didn't. It just shy of it and then kept coming deeper into the discount one. Now we've traded, the bodies are still sitting. Now we've actually traded low, it's going lower. So we've traded below that level. See how we opened below it, came back up inside it, took out the lows. Not super clean price action, but you can still see it there. There's multiple models you can use. Like I said this morning, I used a CAM model 1 and 2, and oh, you can use, I think it was a 1 entry that I used on one, and then an extension when you see the range continuation come back in. That's like an extension model. It's also a CAM model entry. And then you have the reversal, which we think is the Reaper, Michael's Reaper. If it's not, it's just a reversal I use on the opposing side, not the fair value gap you find on this side. I know Michael likes to treat this one on this side. I like to look for this one on this side as my entrance. See how we traded below the low? We came back up, found support at the low, continued pushing lower. $109. So was it Hadi you were calling 109? No. Yeah. This is target on the. Why did you use that as your target? Ah, okay. 107, 108 as well. Nice. Our little carrot. We can bring back down. Now those lows have been taken. That low's taken. Looking for this low over here now at 69. Look for a run down into here. So you're looking for any opportunity for a reversal. So again, you're not looking for anything inside here. This is kind of a big stretch here, so I don't want to see this break the upside. If we're looking to go higher still, then I don't want to see this with a bold candle get through here. And really you're back inside this larger range here. So you'd want to see it get through 128 on a close. This could just run all the way back up into this breaker here and then run lower. Right there. So now the thing is, if we close above here and use this, you don't want to see it get below. See how we haven't closed above it yet? We come back inside here. I want to see this old high get hit. 3, 2, 1. Still no closure above here yet. We have dipped back into this. We've closed above this right here. There's your reversal. It's give it a little tap, pushing higher. Highs taken inside the larger range now. You want to see a body get above here. And look at you're in a premium too, so keep that in mind. You finally got one above. Push back up to 128. You got to get through 128. So there's your run back inside that range. And you have to ask yourself, what's that worth? You got to be below 50% of that, or below 50% to get the discount, right? So from here to here. So 50% would have been down here, so it still wouldn't have been. And this is all hindsight. If you're all saying I should have, I could have, would have, and it's all based on hindsight, you're wasting your time beating yourself up over stuff like that. Wait for something clean to hit. So if you didn't get a 50% and it ran, who cares? It's a 15-second chart. Like we said a few minutes ago, it'll give you another setup. Look for this opportunity here now. Now you want to see this 128 has been taken to the upside. I want to see that whole price now, right there. And you're at 7 or 9:30 now, so you don't want to be messing around with this, because now you're back inside this range now and this candle. See how quickly that reverse. So for me, there wasn't a setup there. We didn't quite get the discount array to run up into that range. It just ran out, extended the range, took out that high, quickly reversed right at the open. And now we're still looking for the little carrot down here. If we can get a return back into this candle here, or this old low, that'd be nice. Now that we're trading through here, I want to see a return back into 95. Good. All the way up to 111. Now you've taken out that low. There's an imbalance right here. See how we've come back to the imbalance? You got to keep your eyes on these real quick, because if you take that little imbalance you see right here, see that? That's your indication that we've got another reversal now that you've taken that out right there. It came back up, reversed back all the way back up inside this range. And if you don't like the way this is being called, because the markets are switching up on you real quick, welcome to the pre-election market and the manipulations that go on at 7 or 9:30. So there's the quick return back into the premium level of that small range. Inside this guy here, body's still respecting that. And now we're driving lower, looking for the discount array. So we said we could allow it to trace all the way back up into here. Quickly give you an opportunity to say, hey, look, we're coming back into that range. Just ran over the 50% and then continued its trek lower. So we're watching for 69 now. There's the carrot. So now you look for relative equal lows below you at 53. There's 69, so 53 is next. And then you've got 09. There's 53, 09 next. All these lows are taken now. So you're looking for any opportunity right into 43. That imbalance right there. That could be a nice little potential reversal right there, just off of that. If we don't come all the way back into these equal lows here, this daily fair value gap fill, a new week opening gap, which is what we're bouncing off of right now. Now we're coming through. Okay. I was wondering if we could get some support inside that imbalance there, but we're still coming lower. Yeah, agree with you, Dave. They're within reaching for you now distance. And then we also have the did that get hit? The event horizon. See how we've got this candle here is traded above that one there. Now it's traded below that candle right there. You want to see it come back in here, find support at this and come lower? You'd have to break this candle's high. Start looking at that as a decent swing now. We've traded above it and below it. So now I just sit on the sidelines and wait for the high to get taken or continuation lower. So you think about inside this range right here. Where are you sitting right now? You'd want to see it come back right into the tops or the open of that. This candle, or its close, I should say. I'd like to see it come back into the tops of those first. It's already filled one of your upside objectives. Do you want to see the mean threshold of this candle give way now? Remember, it doesn't start changing your direction until we get a little market structure break here. This is good. I like that. So we've got this little high taken here with a body. And you have so you've taken out a high. You've got a reversal potential here. And you've got this order block here that you want to see a key off of to go higher. So you want to see a wick come down and tap that and nothing more. Right now it's just filling that fair value gap, but there's a small little imbalance below you here. So you want to see a wick here to here, and you want the bodies to stay above here. And you're not getting that one. Continuation. So look for these highs to get taken. I think your next price leg is far enough now. So our little carrot's going to go up here now. We're going to get through that first fair value gap presentation. This will be my first objective up to 131 and see how we act above that. If that, we're going to extend into this carrot and beyond. So now here's the thing. If you can't get in this one here, we didn't see a return to that old high there, which is ideally where you want to see to capture a break-in structure like that. I like to see that nice clean break-in structure and then reverse back into that candle's high, and you didn't even get that. Just filled the fair value gap up and went higher. Look for this order block here, trades above it. If we can get back into it to tap it to go higher again, you're looking for that again, that 131 to give way. So right where it's sitting right there on that wick, you want to see that give way now on a close. And it's literally sitting at 131. You want to see a body get above that. Yeah, it was box to box for sure. If you caught this as the reversal, I didn't like that. Remember, we traded through it, and then you wait for that one to break the high, and you didn't get that. So I saw this thing here, but see how it traded above it, then it traded below it. So as soon as it trades, does that once or twice, I'm out. You got to wait for it to take out that high. Takes out the high. We don't get the reverse back into that high to get the run. So if you caught that right there, Hadi, good for you, man. You're bolder than I am. Your stop loss would have been squeezed but not taken. So if that was you're playing chicken with the train, I jumped out of the way and it turned around and left on me. Not that I didn't took the trade, I didn't, but that's from what I was looking at here. So if you took that here and held, even though it traded below that level right there on a close and didn't take your stop loss, like really close to taking your stop, then traded back against you or traded back into your objective, Then you get a body close above again here, inside, closed above one more time. You still didn't get an opportunity to get back in on it, so you would have had to have just trusted that that was going to hold, and you're willing to lose your stop loss if it did. And then that paid off box to box. So, or sorry, box to box inside the larger range here. You took a part of that run. Excellent. Good for you. If that line gets hit, then that next price leg has been completed. It's looking better all the time now. I want to see it react off that first presentation. You can see how we're just kind of working it right now. I'd like to see that just get some lift off of here now. Okay, so if we break that candle on the downside, not a significant, we have not broken market structure. Up here, broke it here, 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 inside that range, traded all the way back up inside that candle's mean threshold right there. Its mean threshold has been hit. We've got a high taken right there, reversal, order block, trade back into it. You can go short there. Not that I would tell you to go short, but that would be, and you wouldn't want to see that regular trading hour or that first presentation gap get taken on the upside now. You want to see it hold price and go lower. Yeah, exactly short. Sorry, I keep tapping my face and tapping that. I'm leaning on my hands here over the table, and I keep tapping my mic. So you see how this is not a low resistance liquidity run. It's just kind of going slow. The algorithm's still kind of unwinding, but it's doing it really slowly. So we call for it to go lower. So it's so far acting lower. Pull your stop loss in tight and say if I lose, what candle would I lose for this change? Where's your fail safe right now? Where's your fail safe there, Hadi? Yeah, it'd be risk free right now. I'd be practically probably just paying the trade off right now. If that's the short right there, my stop loss would be sitting right there. Because if we take this to the upside, and then we're running higher. And this is just the next price leg higher. If it doesn't, then that holds, which you want it to hold, because there's a little fair value gap there. Now we've taken out this low order blocks. There, would have taken me out there. So now we're looking for this to go higher. Once a body closes above here, see how the wick just took it out? Just above the fair value gap. You're just up here. You're out. Okay. Yeah, it's a small little reversal. You want to see a body get above here though? The wick would have been enough to take me out. And basically what we do is you trade it above that. I have to extend this so you can see it. It does make more sense when you see it clearer. So you're looking right here right now. And see how that failed, and the fail safe would have worked nicely right there. See, there's the reversal right here. Body trades above it, come back inside it, going long inside this range. Now I want to see if this failed right up to the fair value gaps fill. That's box to box trading internally. That's the internal range box trades, or discount to premium, like to like array. Now you want to see this extend through here on a close, find support, and keep running higher. If it doesn't, if it just goes box to box and it bounces off of here, we're looking for it to run back all the way back into here again. So watch how that acts. That makes sense, Adi? You can see why that's that fail safe would have been right there, because that's where if you break that high and come back to it, you want to find support at that and start pushing higher. And you're already in the premium portion of that range. So if you're not trading box to box in the reverse, you're trying to go short. So it looks great for a short. All the time we came back into there and kept going lower. But the moment it starts to come back in here, you just got to ask yourself, that doesn't look good. I don't like that. But see how that box is still holding price? So it would have came back and just taken out your stop loss there above the first presentation. And now we're back through here. So now you go, I'm going short again. We're using this to find support here. See that? Consequent encroachment. And now you want it to come down lower and take out these lows. Now we're going to extend the range. This little range here, you're going to extend it in the opposite direction. And then it goes higher again if we get above here. And if it gets all wicky and stuff, this is where you start saying it's not acting the way we would typically want it to act. So it's not because I'm calling it wrong. It's just that's when you go, the algorithm's not as clean as I'd like to see it. act. So right there, I'd like to see that just start coming back down now. That's the highest point. You'd want to see something go on. And we're in a consolidation, so we're bound to get bounced around in here. It's trying to shake us off, right? We get a body close above, then we're back into running higher again. 2, 1 there, we're up above. Come back, find support at this candle here. It's high or it's open, sorry, it's close. And start pushing above this high. So now we're going to extend the range higher now instead of lower. See how we traded through it and then back through it again and then used it for support to go higher. This is when that consolidation stuff can really muck you around. You can get thrown off. Oh, I'm going to go short. Oh, no, I'm going to go long again, back inside that range. If I take out that, then I'm going higher. Looks higher, come back to that order block. The fact that we're digging into it again, not fun. I don't like the mean threshold getting dug through multiple times, just that high and the open. Sorry, the close there. This is as high as or as low as you want to see it come, and you don't want to see a full fill of that fair value gap. It did, so it loses its luster for me if we get a full fill. And that mean threshold would have been perfect inside the regular trading hour, or sorry, that first presentation fair value gap. All of that would have been quite nice for bullishness, but all this wicks and stuff not acting the way I want it to act. It's what you expect, I suppose, in pre-election time. Curry Fishball, good morning. Or good evening for you, I guess you are. There you go. That's it. So we ran, it did, the wicks dug in a little deeper than we expected, or I would have expected. We did get a full fill, finally ran to our objective, the carrot, and upside price leg is finally finished. So now we want to see if this candle holds price. No, I don't like seeing bodies dig through it like that. Just one, I guess down this one here. Do we still use this fair value gap for continuation on the upside? Or do we now, this is an immediate rebalance. So I'd look at this as a fair value gap. If we trade below these two candles here, I'd be looking for a run back down into the range again. Back down into the box here. Which would be somewhere around here. How's your oil doing, Craig? Trade up, inside, all that big mess there. Boy, it's been banging around in here, hey? There's a nice little reversal at 9:30. Continuation, take out those highs. Trades above it here, into it here, continuation. Imbalance, below it, into it, go lower. Trade to the next imbalance, and close out your trade, ran all the way through. Reverse, trade above it, trade into it, back inside this range here. A reverse, trade through, order block, trade through here. Yeah, you wouldn't have got any opportunity on that, just a quick rundown. So look for 70.96 to 71, big figure. And where do we get to? 71.08. And our Bitcoin, got nothing in Bitcoin, nothing in gold. So we're inside this range here, small little one. Have a little imbalance below you here. Imbalance to imbalance. You see those like to like array inside that small range. So we take this one first. Let's trade it to the edge of it. Now watch this one. I took the whole run, but my greedy interior dragon keeps me pushing to press the button again to buy more. This is my main flaw, and still not able to slay him. Any recommendations? That's you're hooked on the dopamine, my friend. You're hooked on the rush, the chase. You're not hooked on the setup. You're just on the money and the adrenaline rush. So the only way to slay that dragon is to wait for an opportunity. You can enjoy the rush if you're hitting your objective. So there's that like to like, you see? So we hit the like one I was talking about here, telling you those like to like arrays. Came down, hit one, ran up, hit the other. Now you want to see which one extends the range. So we're trading above it right here. And you want to see if that range extends. So the way you can beat that Edgar, it's a tough one to beat. I totally know where you're coming from. It really is a dragon inside your head. It messes with you, but you got to remember what's feeding it is dopamine and the rush of being in a trade, and you want to be out of that whole idea because you're trading emotionally, and when you crash, you're gonna crash hard, and you'll beat yourself up emotionally because it wasn't a setup. You want to enjoy that rush, then enjoy it with a decent setup, with a clean setup. And if you see it, you just go, okay, so that was the range extension right there. We just popped up above it. Now, if you take out this low here, we're looking for a run back into this longer one, and again, we're consolidating. This morning, I was smashing a couple of trades, and I started getting that buzz, and I even commented in our channel that I'm in that hunt. I was going through different charts hunting for a trade entry, and just realized that my setup was still solid, but my mind is totally in the wrong place in a pre-market or pre-election. That is, you're looking for danger. So with whatever profits I made today, I just move to the sidelines and say, look, wait for that rush, that hunter instinct, that killer instinct to just go in there and just trade everything that you see as a setup, and move to the sidelines and force yourself to wait. And sometimes it's just simply taking the opportunity to stop yourself, even though you see it. And let's say you see a rush and you say, yep, okay, that worked. Wait for that feeling to fade away and just trade a couple of times, seeing your setup, and let it go. And watch the anxiety you feel letting it go, Edgar. You're going to find that you're like, oh my God, I lost that. I could have made money on that. And you get all those things that are the driving force behind your trades instead of logic and reason. Because the markets don't care about your fantasies, your dreams. They don't care about all the things you want to buy or not buy or help people or whatever. It doesn't care about that. It's hunting all of those people who trade with emotion. And you don't want to be one of those people. You want to find a nice, clean, logical entry. And even this morning, this is choppy. It is moving the way we want it to, but it's really kind of moving not cleanly. Let's put it that way. The algorithm is very much back and forth. So if you're trading emotionally, you're not thinking reasonably and rationally, or reasonably and rationally. So I would say practice with your emotions. Dial in on the emotions, Edgar. Just don't look for a setup and say, I would trade this. I would hit the button, hit an imaginary button, and if it runs and you would have, oh, I could have made money. If you hear all that self-talk coming in, that's the thing. That's that little whisper in the back of your head that's actually driving your trade, not your logic and reason. I never thought about it like that yet. You're welcome. I just know that's what it is for me, or was for me. And even now, when I get into a big long trade, I'm looking over here at the dollars, wherever if I put my entry in here and you see the dollars over here, that's the attraction. And then I start looking at, okay, so if I'm up to $300, $400, $500, whatever, I start going, all right, that's $500. And my brain says, as a paramedic, if you made $500 in a day and you went through all that hard work dealing with other people's emotions, other people's crap, and the stuff they'd been going through, that's a long $500 on that day. So if you just made $500, move to the sideline. So I've got multiple things that go through my head that I have to, instead of going, look, you're not a paramedic right now. You're in the market, you're trading it. Stay in the charts, stay in the logic. And if my mind's drifting away like that, I just end up taking my little stop loss and I go, and I drag it all the way down along with it because I'm not in the right mindset. I'm just dragging it on the price and wait for a cleaner setup. So it's kind of like playing a game with yourself and saying, where's my mind at right now? What am I thinking? Write it down. Michael's so right when he talks about the journal entry stuff, right? Journal it, because that's really where you're going to see your growth, Edgar, when you start to get control of your emotions and you trade this completely binary, logic and reason. Once it takes out a low, I'm looking for my reverse, or not. You don't have to do my setup, but whatever your setup is, wait for it to happen. And as soon as it hits right where you want it to hit, that's when you engage. Your stop loss goes there. Have your fail safe in place when you say it fails for me, or my model fails when. If you can't answer that question about where your model fails for you, there's some things for me. My advice is there's some things for you to work on because you got to know when the model doesn't work out or when it fails. You don't want to say it fails, my stop loss gets taken. Well, that's it. You're not looking at how price can change on you on a dime, and then you go, oh, it's changing because it just gave me that indication it's going to go lower right there. People may not believe that idea, but hey, that's my belief. And it seems to work quite well for me. So, and we're pointing it out on a 15-second chart. So there must be some logic to what I'm trying to show you guys here. And if you need to see it a bunch of times first before you're convinced that that's where price is changing direction right there, it's trading below it, comes back up inside it, and it says, I'm going lower, I'm going to extend the range here. Look for that to happen. And where does it fail for me? Well, if it trades back through that on a body, then I know that it's consolidating and it's starting to reach for the order block above. And see, there's the range. It just popped below it right there. So you can tell it's going to do that by simply looking at these little observations in price. Now I'm looking at a larger range and I'm looking back into this box right here. And you see how choppy this is? It's not clean. It's not going bang, bang. This is when you know it's high resistance, when it stays inside these little arrays that you want to see it hit it and quit it. You don't want to see it linger around, just extend the range a bit, then pull back in again, extend the range on the other side like this seek and destroy kind of thing. Runs for the high, runs for the low, comes back up, takes out this little high right here, comes back down, takes out that little low, comes back, and keeps going back and forth. You have a little imbalance right here, traded above it, back inside it. You've taken out a low, so you keep your eyes on these things here. Now you want to see this run back into this range. So you want to see that little high right there get taken, that 132 right there on a 3, 2, 1. Nope, just wicked above it. Want to see a body get up there, and then you're looking for these relative equal highs above you. My pleasure, Edgar. I hope it helps, man. I know I feel bad for you, man. It, I know the anguish, and I think everybody in here can feel your pain of hearing those voices in your head saying, "Go for it, man. We could get rich. We could do this. We could," and all those wrong driving forces instead of just going, "Oh, price action's going higher. It's going lower. What can I aim for? Quickly take your profits and be happy with, like Hadi does those little box to box trading, right? So you quickly trade from box to box, you're out. You go, I don't care if it runs away on me. I'll wait for the next setup. I quickly put some money in your pocket. Don't judge the $50 in your pocket when there's $1,000 you lost, because that's all hindsight. That's completely an emotion that you don't need to judge your trade on. You don't judge the $50 in your pocket when there was $1,000 you could have hit. Who cares? You could win the lottery if you buy a ticket. Doesn't mean to say you're going to win. You keep the dollar in your pocket. Well, you're a dollar higher than you were when you gambled on the lottery. You didn't win, you lost a dollar. Right? It's simple logic. Keep the emotion out of the trading. And if you feel that emotional thing, flip it off and go to demo mode. Paper trade it until you can get your emotions under control. Otherwise, you will blow accounts. And believe me, I've blown tons of them doing that. I also have a similar problem. I'm very emotional when operating. I have been learning for 2 years and I'm just starting to combine, and I feel the adrenaline and the shock of anxiety. Yeah, when you start to go with semi-real money, when you're talking about these prop firm accounts, you are putting some money on the line because you have to buy the account in the first place, right? So there is that $100, $200, whatever it is you're paying for the prop firm. And it's still that leveraging a demo account to go and make yourself a little bit, hopefully make yourself a bit of money on the side. If you're feeling the anxiety, don't trade. Start trading demo again. Practice. Don't go to these other accounts and wait until you can start to get those emotions. Now, when you start to see the logic in the market, you can't unsee it, right? Once you see it, you go, okay, now I'm looking for this to happen and this to happen. If your emotions are kicking in, note that. Make a little side note. Go another day, go another week without trading until you can start getting that under control. And then when you leverage something, leverage very small and just trade. Just get that idea of trading the account because those emotions will destroy your bank account. You'll fall victim to them, and they're the worst things you can fall victim to. The logic makes so much more sense, so much more easier, right? We see this, we're calling this longer as soon as it got above that level. It hit that level here, traded above it, came back inside it, right inside this order block here. We got a trade above, came back inside, we're going higher. We take out that little uh, fair value gap here above it, you come back inside it, right here, and we extend the range. So logic and reason, you should have no emotions over that. You should just say, this is what I'm looking for. If I trade back into that, my stop loss is going to sit here. It did not give me what I want. Think about it like this. If it didn't give me what I want and it traded through me and took out this candle on the downside, you go, okay, we've just taken out this high. We've got a reversal. We take this candle on the downside. I just paid for a piece of information that I now know I'm going in this direction. Because if your fail safe works every single time, you know there's a change in direction and price action. And if it doesn't, then your fail safe is incorrect and you need to study it a bit more. But once you understand the price is changing direction, you go, okay, it took out my fail safe. I know it's changing direction. I took a loss there, but I just paid some more information to go in a different direction. You get back in sync with the market and continue going higher or lower. And that's how you got to look at it. Ones and zeros, man. I just paid for some new information. I didn't lose money. I paid for new information. That was a game changer for me when Michael described that and said, you're just paying for new information. That's it. No more than a membership for TradingView to get their data. You just paid for some information. Okay, it just paid me to tell me it's going on because we were talking for this to go. I wanted to go down here, right? It didn't go down there. It started changing direction on me, and I go, if it starts to change, that's the imbalance right there. I noted when we got below here, I was talking about this. It traded back into the imbalance, and I said, okay, now we're looking inside this range. If you start getting above here, then I know I'm going higher. I'm going to reach for the next part of the range, which is this fair value gap here. And if I get above that, then I'm going higher even still. So what did we do? We came back into here, traded through that imbalance into this part of the range, right through it, look for that candle, ran through this one, look for these two, comes back inside those, extends the range, takes out that fair value gap that we're looking for there, trades through it, comes back inside it, and then finally goes higher. All the things we were talking about that you want to see, it's done it. So for you, where's your fail safe? If you're going to go short or you're going to go long or stay going long, where does it fail for you? Where's your fail safe? And once you can see that, the emotions start to drift out of it and you start to go, this is logic. And if it doesn't do that, then I just pay for some new information because I know for sure it's going to start turning there. And if you don't have that sense of certainty, see, that's the low. We've got the reversal here. We lose this on the downside on a close with a bold candle. I like seeing a bold candle get through that. That'd be lovely. 3, 2, 1, bang, there, hit it. Now I'm looking for this to start coming lower. And that can come all the way back up inside this fair value gap. And I'm wrong again if we trade above this level here on a close at 169. Then you're just paying for new information to say, I'm on the wrong side of it again. We have this low taken. We have a potential reversal here. So if we get a body trading above here and come back into this, before it even hits that. Now you've got one going long, one going short. Which one do you take? See that? Body's going through it, so that would be a stop loss. See how the body's traded above that? You're coming back to get your trade off now, because now we're going to go long. You wanted to go short. You came back all the way up to here. We traded through it. You go, I'm on the wrong side of that. You get yourself back. You've got some new information. You get your trade off, and now you're going long. So I wanted that to go short there. That was great. Now we're going short, but it changes for me when I said 169. Traded above 169, came back into 166 to give you an opportunity to get your trade off. We're extending the range, going higher. That's the fail-safe. You just paid for, let's say you wanted to go short there. You went short there, you paid for some information, you found out I'm on the wrong side of this. It gave you a little bit of information or a little bit of your money back. Even if you got in right off that, let's say you took the worst trade, like right off the bottom of that thing there, and you went, oh, I'm on the wrong side of that. I'm out right there. As soon as it comes down back into this level here, I'm out. Now I'm going to get long. You've offset your money you lost between here and here, and now you've gained it all back again. You just paid for some new information. No emotion. You're not upset. You just say to yourself, oh, I just paid for some new information to go. That's an excellent example of what I was just talking about. What's your emotions inside here? Well, if you understand what price action's doing, you'll know when you're on the wrong side of it. Get back in sync again. Now you're looking for the next price leg higher, so you're looking for up here somewhere. Where's my carrot? It's way up there. So it's going to be somewhere like this. I'll put the carrot over here. Does that make sense? I hope that makes sense. I'm working on that. A logical approach. Quitting is not an option. Don't quit, man. Believe me, I lost tens of thousands of dollars doing all the stupid things I shouldn't have done. I totally traded emotionally. Totally emotional trader. I literally used to go, I'm chasing that down now. I'm chasing that up now. Every time the candle went in a different direction, I'd be like, oh, I was the total green grass, gonna get my ass handed to me. I was just the guy giving money to the markets. We're going to equal highs right now. Probably shouldn't short with equal highs. Yeah, I got relative equal highs above us here. You've already taken out that little high there. You got relative equal highs above you now. You're coming back inside this range here. So, Riker, so if you're looking at this range here to here, see there's the reverse right there. We've traded below it. We can't get back inside it. You already hit 50% of the range. So you want to see this extend now. 62% will put us right back to this body of this candle here. So if we can get a little continuation on the downside at 62% retracement back inside this small range here, will get us back to this candle's high, which is right there. And then I'd like to see an extension. Yeah, not bad for an ugly day. Makes a lot of sense. The equal highs are far. Equal highs were earlier, not now. they were exact equal highs. I was in long to them. They already hit. Good for you, Riker. Well, there's the 62% right there. Still no option to get in here. There's nothing in here. If you couldn't have got in here inside that thing, unless it's in a 5-second chart, I don't see any opportunity here. If we get back into it, 166 to 161. Let's see what we get there. Now you're looking at optimum trade entry reversal. If we can get above these two candles here, I'll be looking for that to go higher. Oops. To make sure, am I still talking? Good. When I cough, I don't want to cough in your ear and blow out your speakers. So I want to see these two order blocks here get taken on the upside. We have this little fair value gap or this little imbalance right here. Same kind of thing we saw down here, we're seeing right here. So you want to see this hold price and start pushing higher. Now that we've hit the 62% we were looking for, you want to see this imbalance continue to hold price here and start to eat through these two. If we don't, if we lose this again on the downside with a close, we're looking to come deeper into this range, looking for 161 again to 167. Yeah, we're going lower. So you're paying for new information. If you were to wanted to go long on that, and there was nothing in there that would give you a long, but if you did go long, that's the range you're in from that swing high to that layer. So if you got in on that there, you're trading all the way up inside that small little tiny range. Not worth it, unless it is for you. Low taken now. Now we're starting to get into, well, okay, now if we can break this old high and that old high, we've got a potential for a run back up into 198, 197 to 195 on the upside. Little fair value gap here. Trades back into it. Looking to go higher. Takes out the high. We're getting back into this level we're talking about here. 194, 197. 193.75. Look at that. There we go. We're at 197 now. Now see if that holds or if that kind of just kicks off when we come back in the range again. See that? I see it kicks off of it. 195, 194 to 197 is 195.5. That's how you understand when price, there's key levels that you want to see price act on. And just like that, that's the kind of sensitivity you're looking for. Now I want to see that extend lower. See how we've traded through this with a full body candle, and we've traded below that candle there. We came back up and we gave that one a little kiss on the downside, and now you're looking to go lower. You want to see this mean threshold give way. If it doesn't, we're coming back inside this small little range here now. So we're right off the mean threshold of that candle. You want to see it get dug through. We're back into that order block one more time. Now you want to see these equal lows get taken on the downside. Or we have to drive through this, find support, and then go higher. But I want to see this get taken first before we take out that. So that's the fill. Now come all the way down and clean up those lows. You don't want to, the reason I don't want to see this get taken first is because there is a swing here, but I want to see a significant swing get taken and trade back through it to show that it wants to go higher and not just this reversal here. It's not really breaking a significant low, so I want to see something break the low first before coming through here, getting support above that and finding support in here. So again, you're in a consolidation here. We've hit the upside objective. Now I want to see it come all the way down into 120, 161, again to that 166 that we were talking about, 165. That's my downside box. If you're new to our channel, welcome. Again, we're watching right there. We want to see if a body closes above that, and then if we take out that candle with a body close. So far, the wicks are into the mean threshold of this candle. Now we've closed above it, so now you want to see support at this level to go higher. Not a swing, not what I wanted, but you want to see this provide support if you want to push higher to above these old highs here now. So you see when you're looking at this stuff and you said, I want to see this, that would be a significant swing reversal for me. This is just a reversal inside a range. It's not a big swing reversal. I wouldn't consider this the swing reversal, even though yes, it did technically take out a little small swing low. I want to see something significant. So still no body above this candle yet, but we're trading back inside the fair value gap, SIBI. And now we've taken out this little high here. No different than this one here. We're taking out this high with this candle. We've got a little imbalance here, reversal here. If we take out these candles on the downside, then we're heading back below here, heading back into that 161 to 166 level again. And that's why you see consolidations and how to stay involved in price action. So watch there. You want to see if a body gets below there. See how literally the close is right on it? It's a key level. So watch in the next 1 second. There. See how we traded below it? Now you want to see that go lower. Take out these two candles and that candle's low. If we get a body below those two there, I'm all right with that too. Got to get a body below them though, otherwise you're back into this consolidation stuff again. 2, 1, good. Now you're below it. Now come back, give that a kiss right there. Now you can go lower. Again, you're looking for 166, 165-ish to 161. Boom, there you go. Box to box. If you like what we're doing, give me the thumbs up. If you enjoy this level of detail, give me a thumbs up. If you're new to our channel, stick around. We do this all the time, and this is just pre-market stuff. So ask yourself, where does it fail now? If you can't ask that question right now, if you've lost focus and you're in a trade or not in a trade and you lost focus, close your trade. Because if you don't know where it fails, you could get your ass handed to you. It could come ripping right back against you. You've got to stay focused on the chart. What we'll do is come back into order block here on the low. This order block, these two order blocks making the breaker, takes out this high, trading back inside that. You want to see this continue to extend. Now I want to see if it gets below 161 on a close. If it doesn't, and now we've got this small little reversal here. If we get a body above here, you're looking for 187 to 182. I would love a run on the London highs and call it a day. Yeah, this is one of those ones you just kind of play in it today and just kind of study price action. It's a great opportunity to study price action and play in the charts. So there's the 182. That's how we hit it, and now we're reacting off of it. Now we're going to close. If we close below this level 167 right here, we'll go lower. Now 161. There's 161. Now we want to get a body has to get below 161 now. Is that 161? 161.25. Right on the money. 181. We called it. It went just a couple of little hairs above us. So now you want to see how these are overlapping, one higher, one lower. You wait. You're gambling if you think you know where it's going. I don't know where it's going. It's just taking out a low. You'd want to see it go higher, so you need to see it take out this candle here on the upside on a close, and then go higher. See how it literally was sitting inside this guy right here, right on there. Then it finally goes higher, looking for that 187, up to 187. If you get above 187, you're going higher. I think that's going to be it for me. I think I'll stick around here for a few more minutes. Hopefully you've seen that there's a level of detail in price action that once you study it and you get familiar with it, you see it, you can't unsee it. And if you don't see it yet, don't sweat it. Stick around, come back. We'll get you there. They were above 187 right there. Or sorry, 188.25. And it literally came down, hit it 188.25 and start going higher. So you're looking for this to extend past this range, but you can come all the way down into this little imbalance right here, 182. If you take out that high, look for this fair value gap to become the potential swing. And then you're back inside this range and you're heading from there, box to box. So you can see how this is in a consolidation. Box to box trading is just right where you want to be when you're looking at consolidation trading. Trading consolidations it's not difficult, I guess, if you know what you're looking for. The difficult part is that you've got to have your emotions completely dialed. If you do not, this is the worst place to sit in a consolidation, get beat up in it. Because if you're on the wrong side of it, it switches really quickly. And then if you're not one of those people who can focus really intently, you can get thrown off of it real quick. And then it doesn't work. You'll find all the excuses it doesn't work. When if you go back and break it down, you'll say, oh yeah, okay, I see where it's going. And we've been calling this up and down all through here, and where you want to see it hold, where you want to see it give way, and where it gives way, looking for when it goes lower and higher. So consolidations are crazy. And this is just no different than if this was a daily candle and this was a day, you're in this big consolidation over a few weeks or a few months, and you see these consolidations, you go, well, if it trades below that spot right there, and we can get back into this imbalance, I'd go short inside here, have a whole trading day where I'd come down. My objective would be here right there and hit it. If I extended through that on a day on a close, I'd be looking for run on these equal lows below us for the rest of the week. No different. What you're learning here in a 15-second chart, you'll apply. That's going lower. So um, you can apply that to a daily chart, weekly chart. You'll get really, really good at recognizing where you can get your daily bias from. So we can trade all the way back up into this candle here. Did not take out a low. I don't want to see this candle here get taken to the upside, otherwise we're on the wrong side of that. We have a reversal. See how we're on the wrong side of it now? You pay new information. I'm back inside the range. It's more than 50%. I'm on the wrong side. Now, if that was a daily candle, you would have found out on the 15-second chart or the 1-hour chart, the 1-minute chart, that you were on the wrong side of this a long time ago. So you're back up inside this here, this 187 range again, 187 to 182. You got to get above 187. There, you're above 187. All the range is extended. Now you look for a reversal. Now that you've taken out a high, see how we wanted to see as soon as it trades below that, that gives us, I said, oh, we're going lower. And then I'll start traded back through that level and you go, oh, no, I'm on the wrong side of that right there. I'm on the wrong side. Didn't want to see this get taken. It takes that as well. Now you're in the premium portion of that range. You want to see this level get taken. It did. Now you got further 3 confirmations that that's the high. Now, do we have this as the reverse to come back into a consolidation again? Or are we just going to key off of this level right here, this whole little consolidation here, and start going higher? And now you're starting to head for, I think it was Shuri, Sanjura, who was looking for these London highs. You could start getting, this would be a nice little run for potential London high now. If we can key off of here, get some support off of that and go higher. For me, this is not a big, I want to see a big displacement candle happen here. Use the consolidation for support. Here's your displacement. Make sure that stays a body, not just a wick. You don't want to see a wick run above these highs. 211 is our carrot. That's good. That's what I want to see. Now use these for support. This would be great. There. Now come back, give that a little kiss. Leave that open. Leave it open. Get out of dodge now. So back to consolidation. Cam 1 model entry right there. If you get through more than 50% of it, we're looking to get back into this range. Because now, see how we've taken out that high? We've got this reversal. If you lose this on the downside, you're on the wrong side of that. Otherwise, we're going higher. And if you're back into consolidation again, that's the key off of here. Find support, come back into this range here, and you're looking for 175 to 171. Oh, I'll be here live streaming with you guys tomorrow for sure. I'm not going to miss the opportunity to see this crazy election day. I want to see how price action, because this is a day that you screen capture, man. You screen capture all this stuff going on pre-market, during the market open, the day before the election, and just kind of put it in a diary entry and say, this is what happens in election time. And especially in this election, you see how we've traded below that level now? We've traded below, we've come back inside it. If we take out this candle on a close, we're looking to go lower. And I don't like the fact that we've already wicked all the way through it. So I would assume this is going to come down lower now. So yeah, you kind of screen capture these and note it and say this is what happens during election time. So next time there's in 4 years when there's an election, you can start going, uh, this is the kind of chop I can expect in the markets. We do not want to get a body closing above 201 now if you want to go short. And again, don't think about taking trades here. It's just way too all over the place. If you close above that and back into, do we take out the mean threshold of this candle? And look at how they're just banging right on that level. The algorithm's just smacking in it. Little tiny candles in here. What a crap. That's just crap. You don't want to see that. You want to see whack, whack, and just take right off. Just start ripping through these levels. And they're just literally sitting all on there, up and down, right on that level that we're looking for. That 18 or 201 is the upside. That's as far up as you want to see that close, and it just closed above it right there. So mean threshold. Does that hold price? And now we get through here. You got to get through this candle right there on a close at 196. Where does it fail for you? Right, 196. If it closes below 196, then see how it literally closed on it? This is the kind of stuff you want to pay attention to. Why is that level so sensitive? Why is this level so sensitive? Why did you stop there and start going back up the other way? They're sensitive levels, man. You got one that wants to go higher, one that wants to go lower. They're overlapping each other, and now we're banging around off of the two of them. Somewhere along the line, the algorithm's got to let you know what direction it wants to go, and it will give you a little hint before it does it. So watch this one and this one. Mean threshold. There, now we've closed above it. So now come back, give it a kiss. Now get the hell out of Dodge. Go up. And obviously you want it with some intention now. You want to see it just driving up there really hard and fast. And you want to see the carrot. You see it reach for the carrot up here. And not the small meandering stuff. Because right now we're in the mean threshold of this candle. Start going. You've given me the indication you want to go higher. So get up there. If the mean threshold holds though, you're like, oh, okay, we're going to dick around in here a little longer. We're going to come back in. Are we going to take out this low here now? Now you've run that high. Are we going to run this low? Clear out the liquidity. Just banging around back and forth. Five more minutes and I'm out of here. This is when it'll start taking off. 11 o'clock. You'll see the 11 o'clock. Because right now we've got the macro. The 1050 macro is supposed to be spooling. See, there's not much spooling going on here. All the markets are just trying to stay in a range till the see how now we pop below that. Look at this candle. Remember I was talking about this one? What's the high on this candle right here? The high is 196.25. What's the close on this candle? 1955. So it's traded below it. Just says, hey, look, I'm going to extend the range. Give you one little opportunity to get in. Poof. Extends that small little range bigger. Takes out these lows. And now you're back into focusing on the next range. Or do we just come back into these candles here and continue pushing lower? And I'm looking for 173 to 175. Once we get below 186, 173, you got to close below these on a body. Otherwise, we're back in here again. See how when you're looking for, we wanted to see this one take out this low. This would have been a much nicer candle to key off of to go higher. But because we didn't take out those lows, we just got this here. You trade back inside it, drop below it, gave us the indication, okay, we're reversing. We're going back in the opposite direction. Not a clean break below a low, so not super exciting, but it is changing direction. Took out that high. We come back inside it to go higher, extend the range, gets a reversal. Do we trade below here? Nope, we finally trade below here now. Trade back up into this candle. Now I'm expecting this to continue getting lower. And I want to get through this candle now and this candle. So these two are battling each other, that guy and that guy. We want to see this guy hold, that guy give way, and start digging deeper into this discount portion of this range. Tomorrow the fireworks will begin. Could be going all week. There'll be recounting going on. If it's a blowout, it'll be one thing. If it's a really tight race still, you're going to see ballots get recounted, accusations flying. It's going to be nuts. Keep your money on the sidelines. What else? Before I go, let's have a quick peek at all these other ones. That's all choppy too. Still looking for this guy to make a dive down. They all look super like they're ready to just tank. I don't know why. And I hope if you've got things in the market, I'm completely wrong. And it's a feeling, there's nothing that really warrants me other than the fact that we're coming back into this dollar could drop. Man, I could see some stuff happening here. Euro, oil. What's oil up to? Oh, you got a nice little reversal there, Craig. At the 1050 macro. See that 1050? That's the thing you want to look for. So here, I'm going to give you this last little piece of information before you go, and there's only 30 of you in here. You're going to get a little secret. Wait for the 10 to the hour macro every hour and look for this. That could be your setup right there. At the beginning or just before the beginning of every hour at 10:50, 9:50, 11:50, 1:50, 2:50, look for your sign to occur right here at this reversal to occur at the spooling of that uh, macro. And as soon as you see that happening at 10:50, look at that, 10:50 comes back in, starts spooling right off here, running back up into the range, box to box, right there. Box, box, move to the sidelines, have a nice day. Go till 10:10 or 11:10, which is over here somewhere. If you want to catch that reversal, drops below it, comes back up inside it here. You're inside this range there. Now you're back into that box again down here. Well, this one here, if you're looking at this small range. Otherwise, back into this box. Fair value gap. So you could have traded that direction, this direction. There's the bottom box right now. That direction, this direction, on a spool at 10:50. Go back to 11:50 or 9:50 and look at the same thing. Where's the 9:50 one? Here's 9:50 right here. Order block. You trade below it. Trade back up inside it. You get a reversal. So here's your 9:50. See that candle right there? Trade back inside the range. You're from here to here. You would have got a very small run from there to there. Because that, let me just take that thing here. I want to show you. This isn't hocus pocus here. This is something that you can, if you see your setup. On the wrong side of that one. You traded back up, got yourself a discount. Traded at 50%, move your stop loss to break even, half your trade is off. You hit 62, nope, comes back and takes you out. Oh, would have come back here and taken you out. So you would have half your trade off there. As soon as it takes out this low on a close, if it can trade back into it, it doesn't. It continues on the downside. So wait for those macros to occur at the 850, 950, 750. Every hour, wait for that macro to start spooling and look for that specific setup. And if you see it, that right there is a trade model. Set your watch, come back to your charts every hour at that time and say, is it there? Nope, walk away. Is it there? Oh, there it is. Look at that forming. If I can catch that now and I run back into this range, pull my fib tool on that and run it all the way back in, make some money, come back in another hour. Did it set up? No. I'll come back in another hour. Did it set up? No. If it's there, take it. Stop loss goes down here. The moment it breaks 50%, move it up. Follow that rule over and over and over again. It's a really nice little trade model. But that's it for me, folks. I'm out of here. I'm going to go spend some time with my brother and my girl. I've enjoyed my time with you guys this morning. It's been kind of fun. There's lots of cool setups. Well, let me continue going across this thing here and see what we got. Still haven't got that one. We've got this one. The return back into that range. And sugar. You got to get above there. Cattle. We want to see cattle get below here. Nothing. I got nothing in there. Bitcoin. 737 would have been a nice little play for higher. This one here at 6, 8, 17. Trade back into it at 831 for continuation on the downside. So let's pretend we're at our 850 or 950 here. We go at 954. You go, oh look, there's a reversal. If we can get above that and get back into it, I want to go long. Here, you wait. You're in it right here. You trade it all the way back inside it. Getting long. You're looking for this spot right here. You got it at the next macro at 1050. So next 50, there's your next macro at 1050. Trade it down below it, comes back up inside it right there for a short. There's a 1050 macro in Bitcoin. So those macros, the 1050 macro, I tell you, that could be just your trade model every hour. But are you one of those adrenaline junkies that, like me, you want to be in the 15-second chart looking for action all the time, or what? Oh, the banks are kicking up. Look at that. Here I am saying banks are going to tank. I sent my buddy an email. I think your banks are going to tank. He's probably going, you're full of crap. Look at it. Just took off today. They just took off 3 out of this one here. Looked like it was going to go lower too. So I don't even trust banks right now. They're all over the place. Google still coming back to that level. We've got our consolidation now. I want to see Google kick off of here. We can come back all the way into here, but I wouldn't want to see this get closed below 165.5. Natural gas, 12.95. I want to see that just start lifting now that we've taken out this low. I bought a chunk of this stuff right down here as soon as it took out that low. So I'm hoping that it starts getting above this candle's high, and then we start leveraging. And if we can get back into here, almost double your money at 22 bucks again. If we can get up here, it doesn't matter. I just want to see it get above these candles on the way right now. I like the response to date. That's good. And all those guys, I'm not really focused too much on that lot. Anyway, that's it for me, folks. I hope you enjoyed yourself and you learned a little bit about price action, or you got a little clearer understanding of where price is going to turn, especially in crappy markets like this. It's fun to stay in it. It's fun to practice it and see if you can stay on the horse. But until I see you tomorrow, all the best to you guys. Stay safe and really be careful about engaging in the market today. It's looking to hunt for people and take people out. So just practice it. Mark up your charts. If you want to chase price, chase it the way you want to see it go. Look for specific levels you want to see it go to. Mark up your chart. And if it doesn't hit that, analyze why did it stop there? Why did it stop on that specific spot? What is it after? What is it? Does it come back to a consolidation? Is that what we're keying off of again to go higher? Like, start studying your price action, and you're really going to get better and better at this, and you're going to feel more comfortable. Your emotions will be waylaid way more frequently when you feel more confident about where price is going. And then when you see markets like this, you can happily stay out of it and say, ah, look, I don't care. I'll wait till the markets ease up a bit. If I don't mind waiting until the new year, I don't have to make it all right now, because risking it all to lose it all, that's a lousy way to go into Christmas. It's a lousy way to go into the end of the year, is on a big loss, giving back all the profits you may have made for the year. So anyway, I wish you guys all the best, and I will see you tomorrow. Take care.